Good morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. This is the euro. In order to understand better what's going on with the euro, we are going to make a fantastic exercise of institutional cycles or smart money cycles. Look, the price on the euro has been going down. We have price reaching lower lows, lower lows, lower lows, and lower lows. That has been the story behind the euro. And eventually the price moves up. All right, nothing new. This could be just one of those retrace that we have before, nothing new. The price could very easily continue lower. Why not, right? And the price actually starts moving down, but eventually we have some demand happening here and it accelerates, and that's a different story because it's starting to make higher highs. So clearly the big guys, the commercials, were doing accumulation. They were buying all the lows, buying, accumulating long position slowly. And finally, the price did a big push up, and this could be the beginning of something new. After that, price collapsed like more than 100 pips in 1 4-hour bar and create this low right here. So we can create a box around this area. This area is a liquidity zone because it's where the stops from a lot of traders is going to be placed. All these guys that went long during all this tail or here or here or here or here or here, they have their stop in this area. So the institutions already made the first exploration to start stop hunting this area to clean the liquidity. And the next step is to complete the wave count, so 4 and 5. This is the first trading plan that we have for the euro this week. Once we have a candle moving above this area after completing the 5-wave sequence, I'm gonna go long from there. So this is scenario number 1. Scenario number 2 is if price continues here lower and hits the previous low, because there is a second liquidity area down here, right? So if the price continues and hits this area and cleans the liquidity and reverses, I'm going long here. But according to the wave count, the highest probability scenario is the one where we have the reversal just here. And why? You know, for the institutions, it's a dream to see the price coming down to this area. They would love to see the price coming down to this area and saying and having the trade coming down here, cleaning the liquidity, buying more at a good price. But the problem is that they are not selling to push the price lower. They are withdrawing the liquidity on the book. So they are not providing the same liquidity. So they are just letting the price move lower. But eventually we are not going to have more sellers because these guys, the big ones, they already absorb all the sellers. So eventually there are no more sellers, so the price can't continue lower. And they are not going to make a big effort to push the price lower. It doesn't have any sense. So actually what they do, they start when they see that there are no more participants willing to sell, they start buying and they say, okay, our campaign is completed. We are ready. And once they are ready is where they start buying heavily and the price moves up in a wave 3. So that's why I'm getting ready to go long once I have my setup after wave 2. Let's have a look at the S&P. The S&P is fantastic. The S&P has been moving down So from the 4744, this is the index, to the 4492, this analysis can be applied also on the ES, or the SPY will be exactly the same, just different quotes. And look, in order to move the price from 47.44 to 44.90, 252 points in 8.8 days. But then, in just 4 days or 3 days, we have the price already recovering 60% of the previous move. Sometimes we want to find out which one is the impulse. So let's say that the market is moving like this, 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 is moving like this. And then you have a movement like this one. Which one is the impulse? The move down or the move up? Clearly the move up. Speed. Speed really matters here. It's really important. So the S&P is ready to continue climbing. We might have a discount for wave 2. Hope we have it. In order to add to the position, we're not going to buy at the highs, and then we just follow the trend to the upside. In order to reach higher highs, in order to be able to participate in the fantastic bull move. I have been accumulating since the big, after the big crash of the pandemic. I have been accumulating SPYs and have been a fantastic year, But here we can just, with these discounts, we can continue following the trend. I was telling my clients last week, when we start seeing the bearish cycle, hey, this could be the Black Friday in the stock market. We have been seeing discounts everywhere. Well, the stocks are going to be in the discount as well. And actually, that was true. We have a fantastic discount on the S&P, one of the biggest discounts that we have been seeing in previous months. And look where we are now. That's fantastic. That's fantastic. So that's where we should be trading, at the lows, at the discount, not at the highs. All right, traders. So if you want to access our content and get the live market analysis every day, you can visit us at elliottwavestreet.com/membership to activate your membership on our website. Then go to the membership tab, and here you will see all the plans that we have for the Forex trader, the stocks trader, the full access. Here are the markets that we cover on a daily basis. And we also have the new Members Academy with some education from scratch, with the Elliott Wave Crash Course included in the membership, which is fantastic. So you get education plus a live market analysis. You can sign up for just $19 the trial for the first month. Please have a fantastic trading session, a great week. I'll see you soon. I'll see you inside the membership. Take care. Bye-bye.